Hi everyone, today we're going to talk more in detail about the main components of technical analysis. Here's a reminder of what technical analysis is. Technical analysis is a method of analysis that only uses information obtained from the asset price chart to predict future performance. This analysis can be broken down into four main components. We have trends, support and resistance levels, patterns and entry signals, and finally indicators. First, we will take a look at trends. Here's a 3-month chart of Bitcoin we'll be using as our example. The black line helps you visualize the price of Bitcoin, making higher highs and higher lows. The higher lows are highlighted here with the red circles. Since the price of Bitcoin is trending upwards, this would be called an uptrend. And we could reasonably infer that Bitcoin will continue to gain value over the next month or so. Now trends can also move in the opposite direction. Here we have the 1-month chart of Tesla stock quickly losing value. The black lines show the two downtrends where Tesla stock constantly makes lower highs, highlighted by the red circles here. Each time it tries to recover from the downtrend, it gets rejected at the black line. The downtrend actually increases here as Tesla picks up its sell-off rate. The second black line on the right shows a much steeper slope. Psychologically speaking, downtrends are harder to predict when compared to uptrends because people tend to panic sell, whereas uptrends are more predictable because of support and resistance lines, which leads us into our next topic. Support and resistance lines are used to determine when an asset will make a reversal. In other words, when something will go up from an uptrend to a downtrend, or vice versa. A support line is a price level an asset is likely to be bought up at, and a resistance line is a price level an asset is likely to be sold off at. To demonstrate this, here we have the 6-month chart of Amazon stock. The blue line represents the support line for Amazon at the 6-month time frame. As you can see, Amazon bounces off the blue line at $3,000 every time it touches it. In the same image, the red line represents the resistance line. As you can see, every time Amazon approaches $3,500, it gets rejected and falls in value. This information can be used to safely predict how Amazon will move each time it hits a support or resistance level. Next, patterns are used to predict the general direction a price will move, while entry points tell you the best point to buy in order to maximize profits. Here we have the 1-month chart of Apple. And as you can see in this time frame, Apple forms a very nice symmetrical triangle pattern. Based on past market data, symmetrical triangles tend to break out in an upward trend, which is exactly what Apple does after forming this symmetrical triangle. So you can see the upward trend here. The entry signal here is at the end of the triangle, because at that point you can see the pattern has formed and is about to break out. This entry point here allows you to get in at the lowest possible price so you can maximize your profits all the way up. Finally, technical indicators are mathematical calculations based on historic price. Based on historic price, volume, or open interest information that aims to forecast financial market direction. There are almost 100 different types of indicators, but they all have one common goal: to tell you whether something should go up or go down. Some of the most common and basic indicators include moving averages, which come in many different forms, such as the simple moving average, exponential moving average, Bollinger Bands, the MACD, which stands for moving average convergence divergence, and the RSI, which stands for relative strength index. Here, to show how indicators work, we will be using RSI as our example. Here's an explanation of RSI, but all you really need to know is that if the purple line goes above the purple zone, the asset is overbought and it has to come down in the short term, while if the purple line goes below the purple zone, the asset is oversold and has to come up in the short term. To demonstrate how RSI works, here we have the 1-month chart of Netflix stock. So on January 19th, 2021, Netflix reported fourth quarter earnings that blew expectations out of the water. And with such good news, a lot of money was poured into the stock, driving up the price. So you can see the price change right here. The RSI determined that this price change was happening too fast and the stock would eventually have to come down. So sure enough, over the next week after the earnings report, Netflix lost value. So that's it for the main components of technical analysis, and I hope you learned something new today.